All right, this will be a trading recap for January 22nd, 2024. So first thing to any trading day is looking at the market and creating a plan. And for today in particular, the market was in a strong uptrend on a larger time frame at all-time highs. This is new price discovery phase. And going to a more near term time frame, some levels that I were watching to play scalps on were these two pre-market levels that you can see here on the 5 minute chart. This one was pre-market high slash all-time high, and it rejected 3 times, forming a nice res level. You can see that right there. And then this lower level, which was right here, you can see was resistance originally, on a reaction to a strong buyer, and was the all-time high at that point in time, and then has been acting as support since being over. So I had these two levels on watch, along with demand here and then demand here lower, which were not going to be covered in this video since price did not move down there. So going into the market, I was watching for rejections at the highs. So I was watching for sellers to come in here and play it short. Uptrend continuation on key level bounce. So I was looking for the market to come into one of these key levels and bounce, continuing this larger time frame uptrend. And then a break of line of least resistance targeting demand. So that'd be a break of this level. So two things. This level I was watching for possible long attempts, so looking to be a buyer down here, but then also I was looking for, if this level breaks, to play short doing this move. So that's where a lot of reading the tape and reacting to market information comes in with this type of strategy. And then same thing for the top. I had this level marked to watch to get in short, but the play I actually end up taking at this level is completely different, and you'll see that in a second. And I didn't have it planned at all, but that's the beauty of adapting to intraday market generated information. So we'll go ahead and look at the trades. So the first trade took place near open. This level of resistance that we were talking about broke with aggressive volume, and then aggressive buying volume. And then when sellers came in on this retest and buying started defending this old key level, this previous high from pre-market, I looked to get an entry. The way that looks, trade one. I'm on the wrong day here. Okay. So here's that strong buying at open. Here's a selling retest. And I saw buying come in at this key level. And I got long. Ended up stopping out for a quick loss. And that takes me to my second entry. So after losing that trade, I noticed price starts stalling out down here, forming these lower wicks. But I'm not really actually looking at these lower wicks. I'm watching the tape. And as sellers are coming into this level, which was the previous all-time high, aggressive selling is slowing. It's really aggressive up here. It's slowing as it gets into this level, and then there's some buying coming in, prompting me to get in for an entry. And that ended up working real nicely. I got out there. So I think that was on that candle, but a pretty good exit as that became the near time high. So the market then ended up rejecting from this high and ended up moving down below that previous high that we were watching and came down into this other level that I had mentioned we were watching from the pre-market plan. So now the market had done some stuff, had some activity above this level, and now it's coming back into this level that we were watching. And keep in mind, this was a level I said I could watch for it to break, targeting a move below this level into that demand level, or I could also watch to play long here if it holds. It's all based on what the market gives me. So if we look at trade 3, this trade took a little bit more time to develop, as part of my validation thesis occurred way before my entry. So when this level, this 4880 level was first broken, price swept way down here and then jolted right back up. And from this buying right here, there was what I call intraday demand put in, where there's really strong buying left behind. And what that means is you can look for, given other context of the uptrend and this being a key level of possible support, with that intraday demand coming in on the tape now lets me know that, like, when this level of price gets retested sometime in the future, to possibly look for longs if there's good validation there. And here's what that initial demand looks like on the tape. It's kind of distorted because the selling was so aggressive that these volume balls are so big, and these ones are proportionally related. So these, to me, these would normally look a little bit bigger. But then on the entry itself, the retest of that level, you can see sellers failing at this 7-8 level, which is 7-8 right about here. So when the market sometime in the future came back down here, I see sellers failing, buying coming in, buying coming in, buying coming in, and then eventually on this buying attempt I get my entry. And this trade ended up being nearly an hour. I was like walking to class and it stopped out right as my class ended, or started, rather. But that was for break even. So now, at this point in time, I got long here, stopped out down here, or stopped out here, and now the market is starting to again hold and find some buying in this previous level. So my thesis from the trade I just stopped out on, where I got long here, is not necessarily invalid at this point in time, like in here. And so looking on the 5-minute now, you can see we have this demand area down here where we're retesting. I get stopped out of my long entry here, but if this area holds, I think I still have a shot to go long. So with that being said, I saw some aggressive buying coming in at a test of this level after I had already seen some signs of buying, and I ended up getting in and losing out pretty quickly on that one. Minus 3 points on that. Which, by the way, I haven't been saying my P&L gains. So the first trade, I think I lost 3.25 points, 1R. The second trade, I gained 6.5 points. That was 2.89R. Third trade was break even. 4 was minus 3 points, negative 1R. And then this last trade, I'll say it when I get to it. Trade 5. All right, so I stopped out of this last trade, and then here's what I'm watching now. So if you look at this 5-minute, here's that low of day that we previously talked about, where that demand was put in. That was part of my reasoning for the third trade I took. So that level, that low, was broken. And keep in mind, I said this was a level where I saw we could possibly play line of least resistance break to that next demand zone, which it would be now on this lower left screen down here. But there's also something called a liquidity grab that can often happen on failed breakouts of key levels, and especially with this being a key level, so it's a failed breakout to the downside and an overall uptrend. So if in this overall uptrend, you're already expecting there to be more bullish strength, so a breakout to the downside is less likely. Therefore, not saying this is going to happen every time, but the fake out is definitely more favorable in those conditions. But the key is also to play based on market generated information, which is what I'm about to show you. So here's that old low of day level. You can see there was a large passive seller here, or passive order here, and it got broken with really large selling size. And immediately after, buying came in, but then immediately after that, this is all within just a few minutes, like a minute and a half, more selling came in, aggressively pushing through, making a new low by a tick or two. However, there was no follow through for this aggressive selling. When this aggressive selling comes in, you want to see the market move down because of it, especially when it's coming in below the old low day, which was right here, and then that second push, which just barely broke the new low of day. And then that aggressive buying comes in, and at this point, this is a perfect entry long for me for liquidity grab. And from there, it just rode up and ended up having a trailing stop hit. I wanted to see this level break, but I got 9 points on this for over 3R, 3.6R. I was only risking just over 2 points. So I think it was 2.5 or 2.25 points. So that's a really good trade in terms of risk. Yeah, so that's 5 trades on the day. 2 wins. Where the heck? Sorry. Oh, so aggravating. Alright. 5 trades, 2 wins, 2 losses, 1 break even. 9.25 points on the day, and a really good R multiple. And ever since the close, the market's just been kind of chopping, not much movement. It's been in this really tight range so far this week. So we'll see what happens tomorrow.